Okay, so it's Friday, October the 2nd. It's been a really interesting week. A lot's going on. If you haven't heard, about 8 hours ago, Trump sent out a tweet. That's not abnormal for Trump to send out a tweet in the middle of the night. But this time he announced that he and Melania both have been tested positive for COVID-19. That's going to do a couple of things. We talked last week about how the death of Justice Ginsburg the week before that, 2 weeks ago today, may change a lot of things about the election, and it's going to have some impact. And then certainly who he nominated as a replacement will have some impact. And now we've got COVID-19 in the White House. The only political thing I want to say about that is the reason this country is the way it is and as strong as it is because we have systems in place where if something happens to the president, we have an orderly movement to the next person in line. And it's pretty structured. Our republic has one of the most structured systems on earth in any government, as far as the leader gets sick, the leader dies, second in line, third in line, fourth in line. So I don't think it's that dramatic of a thing to happen, and I think we'll all be fine. But what won't happen probably is that next debate, which was going to be October the 15th, and then there was supposed to be a debate after that. That's wondering if that's going to happen too, because Trump won't be able to campaign for at least 2 more weeks. So this is going to make things a little bit interesting. But that's what it is, and he's out functioning. He was actually in a call a couple of hours prior to that, and he was fine. So I don't think it's really that big of a deal at this point. The biggest question I've gotten this week is, what is a K recovery? So I wanted to address that. A K recovery that was mentioned during the debate on Tuesday night. It's gotten a lot of press. The fact is that every recovery has some effect of the K to it. And the reason is that a K recovery is simply that an industry or a sector, and in this case, what they're referring to as a certain socioeconomic group, is recovering at a smaller rate or maybe even a negative rate from the others. And the fact is that essentially is true, but it's true of every recovery. In this recovery, the K factor happens to be travel and leisure. So we know that as especially information technology has gone up at a pretty steep angle, and we know that travel and leisure is still kind of sliding down. So that diversion where you have one going up and the other one not quite making it, that's what they're calling a K recovery. And we've talked before, we have this different sectors: industrials, healthcare, consumer durables, and we know that, like in 2008, the financial recovery was that lower part of the K. So if we step back, the way we look at it here is we look at things kind of more holistically. We talk about the Dow Jones average and that chart that we see every week, and that's taken everything into consideration. If we get more focused and start looking at each tree, as you will, then we can identify which ones, which sectors, which industries are going up at a faster rate than the others. We can identify which ones are lagging or maybe even continuing on a downward movement. And the problem with the K in this case is because of what that lower leg is, that leg that's not recovering as quickly, happens to be travel and leisure. Travel and leisure has a significant impact on generally lower socioeconomic groups because it's more people that are minimum wage, it's restaurants, it's hotels, it's cruise ships. It does affect some higher income people, cruise ship captains, the cruise ship hire crews, airline captains, the flight crew, and not as much as the flight attendants. And it's starting to affect some white collar areas of the aviation industry. So that K piece here is travel and leisure. Yes, there's a K piece in this recovery. And yeah, that's pretty severe. But if we look at each sector individually, we're going to see travel and leisure really isn't coming back with everything else. So that's not a big surprise, and maybe we'll go into more detail of that next week. But I did want to address it. It isn't something new. It's not specific to this recovery at all. It just so happens that in this recovery, the travel and leisure piece is the one that's getting hit the hardest, and they are not coming back. And that decline in travel and leisure is what's causing that K leg to drop down. So that's what the K recovery is. I hope that answers the question, but that was a pretty common question. So let's go ahead and look at the chart, Mallory, on where we are on the Dow Jones average. The thing to remember is that last night, I was still up when Trump sent out his tweet, And so I immediately went to my futures research and found that the futures had gone down about 485 points. I watched it for about a half an hour. It stayed pretty steady, 450 to 485, right in there to the downside on the open this morning for the Dow. This morning at about 4 o'clock, it had come back and it was down about 315 points. And I was kind of surprised. I expected it to be higher. So now, about 5 minutes ago, we were down again, exceeding 400 points. So we'll probably have a down day without too much doubt. And that's going to be consistent. So if we go back here to our chart, we can see, and we talked last week, you can see that over here on the right-hand side, where Mallory's pointing out, we've got a little bit of a decline going on. You can see the daily movement. We had a decent week in the market, but our moving averages are still moving down a little bit. They're kind of turning flat, but once today is over, I expect them to, in the worst case, they'll be lateral. So we aren't seeing a W yet. We're seeing kind of a lazy V, I think I'd call it. And we're seeing some spikes back here in the middle, about right here, about there was that spike a little bit more to the left, right in there, where we had that upward movement. And then it's just that the moving averages are what we watch. We want to step back. We want to look at the force and see what's happening. And so we're seeing a cautious trend. Now, what I will say is that the research is telling us, and we know this is generally true, that in any election year, between the election and the end of the year, the market tends to go up. And between the election and the end of the following year, which for us would be 12/31 of 2021, the market on average goes up about 17%. That's certainly not absolute science. It's certainly not something we can depend on. But what it tells us is that this time before the election, we knew it was going to be volatile. We've talked about that. But once the election's over, the stock market now has its answer. It knows who's going to be president. That's not so much important that who it is as that the fact that it's decided. And then the market tends to want to slide up. Our case this year is going to be, when will the election be over? And some indications are it may not be over till Thanksgiving, because they're estimating 60 million mail-in ballots, and that could be a little iffy. So right now we're seeing these flat lines over on the right. I expect that to stay right at about that point. I don't expect a lot of movement between now and the election. I am relatively confident that we'll see that starting to slide up again in 2021. We'll see, an increase in the market, and it's going to follow historically what we've done. So, Mallory, let's now go to the next one. And this is our unemployment filings. You can see those are still drifting down. We're still running 800,000 a week new filings. It's going to be, it's kind of like when you're in school and you make straight A's, and then you get that F, and that F brings your GPA down. It takes a lot to get rid of that F. It's always frustrated me when you get a B or a C, what it does to your GPA and how much it takes to get it back up. But that's what happens. So we're down about 800,000 jobs. But what's important to remember is we've also had a lot of people coming back. Today or yesterday was the day the airlines were going to start doing their layoffs. That's going to be 35 to 50,000 people. But now you've got Amazon, you've got UPS, you've got FedEx doing some hiring, and they're talking about some pretty big numbers. Retail, probably most of the retail hiring for the holidays is going to be limited to those companies, Amazon, FedEx, UPS, not so much the box stores. So I don't think there's going to be a lot of change in this, and we'll see that slow drifting back down. And you recall from last week, the Fed is looking at the unemployment rate being down to, it's right now, it's a little bit above 8%, and we may see that down to 4% during 2021. If it's below 5, that's probably a pretty good sign. So these are unemployment filings. We'll keep an eye on that. We did some updates for the last couple of weeks. Housing starts, we saw, they were calling it a disappointment. You've heard me before. I don't think anything is disappointing except April and October. So here we are in October. In about 45 days, we'll have October's number. The red dotted line is where we want to see housing starts. Why is that important? Well, it's important for a lot of things. One of our early questions when we started this program was housing starts and what they do to the economy. Housing starts drive a lot. They drive a lot of financials. Right now, you've got mortgages at 2%. They drive consumer durables. They drive consumer staples. Housing starts alone drives a lot. skilled labor, in a lot of cases, some unskilled labor. So it's really important that that number stays above the red dotted line. And you can see our 7-day moving average and our 14-day, our moving averages for both are above 1.2, which is great. So we had a little bit of a dip last month. I don't think it's anything to panic about. I think the big thing is going to be when we get to probably the middle of November, we get October's numbers, where we are in October, and see if that carries us through the winter. So if we see some normal numbers there, I think we'll be fine. The next chart, please. And then this is our world currencies. Now remember, I did this at the close last night. I did this about 4 o'clock yesterday. So this is the markets for the last 7 days under the 17th of September 20. You see that column, and then that percentage in that second column from the end. That's what they've done this past week. It looks like my U.S. numbers didn't drop in. That's because of the time I did this. So you can see that all the markets were up for the week. That's a good sign. You can also see on the far right-hand side, those are effective year to date. Everybody's making some kind of recovery for the most part in the financial markets, so that's good. We're not down as far as we were on the 23rd or the middle of March. So we've had a reasonable week in the markets, and let's see what happens over the next couple of weeks. But that trend is nice to see. So that's where we are there. So we talked about a couple things today. We talked about President and Melania both have COVID-19. I assume that today Biden and his group will be tested because Tuesday they were doing social distancing, but neither one were wearing masks. And it wasn't exactly a civil conversation. There was a lot of yelling going on. So who knows what happened. So Biden will go in today probably and get tested. We'll get that result, see where they are. We'll see how the debates turn out. First one, probably the next one, the 15th, is probably canceled. We'll see if they have that third one. And then we talked about the K recovery. Yes, there's a K recovery. There is a K recovery in every recovery, the K factor. In this case, it does happen to be a specific sector, travel and leisure. I hope that comes back, but we will not see that come back for probably maybe as long as 24 months. So it's going to be a slow recovery in that area, and that's going to be tough for those employees. And again, those employees are typically, in the worst case, some of them are $2.10 an hour, and then they live for tips. And then some of them are just minimum wage, and generally it is a lower income group that do support travel and leisure. So try and remember them when you're eating out and you're ordering to pick up. We always try and do that. Tip heavily because that's all they got. So that's where we are for the week. Not expecting a whole lot going on. We've got a holiday coming up on a Monday. And then going forward, Thanksgiving is going to be here before we know it. Hope you have a great fall. Hope you have a great week. And we'll be back next week and talk about whatever's happened. And everybody have a wonderful time. Thanks for joining us. Again, this is commercial free, political free. Tell your friends. Thanks to Mallory behind the big blue curtain who gets me through this and gets us all prepared. She does an awesome job. If you have any questions, give us a call, 913-259-2110, or send an email to mmccauley@firstoptionbank.com. Thanks for joining us. We appreciate it.